Welcome to video number 1, how to draw trend lines. Now this might seem very basic, but probably one of the most important videos, so do not skip it. Draw trend lines at the last two opposing pivot candle swing highs or swing lows that also make new highs or lows. What am I talking about here? I'm talking about we've got a swing high, we've got a swing low. Okay, we've even got a swing low here, but we've got a swing low. Then we've got a swing high again, which is lower than the previous swing high. And then we make a swing low because we've broken the low of this previous low. And then we join the 2 points together and we'll call this A and we call this B. Very, very simple, very, very clean. Now, if price pulls back up here and then drops even lower, in fact, we'll move to another slide. Here's an example. Price has broken this trend line and made a new swing high area. So this will now be A and this will now be B because we made a lower low. Although this is basing, we still got pivot candles, and the nearest two that I can draw from price breaking lower is this point A and point B. And we could continue drawing these A and B's all the time and then start to add in our supply or demand levels. So we're starting to combine. So drawing the most recent pivot high or low of supply and demand that's in control. So once you've drawn a trend line, you now know which is in control of supply or demand. And also drawing any rally-based rallies or drop-based drops, supply and demand in control too. Momentum moves like the rally-based rallies and the drop-based drops are just a lower time frame swing highs or lows. Remember that lower time frame. Higher time frame is always king. So in this instance, when we made a new low and we managed to draw a point A, a point B, we managed to put in this supply level. As you can see, price is actually coming through the trend line. We're not going to talk anything about that at the moment. Once we've made a high, a swing high, because this was just the base. Then we made a swing low and another swing high, breaking here. We can now draw A, B as an uptrend. And this will be the nearest area of rally-based rally demand, and this will be the swing low demand. Here's another example how it can actually get a little bit confusing. So we've had originally an A and a B here, then we had an A and a B here. And now we've also got this A and B. So what is this bigger trend line? So if from here all the way down to here, and then price has pulled back, this is pretty much a drop-based drop on the higher time frame. But if price has pulled all the way back and then dropped lower, especially if it's pushed higher and then lower, we are now joining an ABE, but it will be on a higher time frame. So you need to really go up a time frame to analyze this trend line, because it needs to be pivot high or swing high, swing low. Okay, not a drop-based drop. We need to move up the time frame or down the time frame to be able to draw these trend lines correctly. So there's nothing wrong essentially with this trend line, and the area of the breaks are in the same sort of location. Okay, because in trading nothing is 100% mechanical. There is always slight variations depending on the market structure. So that's pretty much it for video number 1, how to draw trend lines. And I'll move into video number 2 next.